Welcome to the MarketBeat podcast. I'm your host, Kate Stalter, and in this show, we cut through the noise and give you real market insights from professional investors, traders, asset managers, and analysts. Our guests put the market developments in context and give you actionable information to make you a more successful trader or investor. Let's get started. We've talked a lot on this show about various investment themes, including, a while back, the Procure Space ETF, ticker UFO. Well, today, Andrew Chanin, the CEO of Procure Funds, is back to discuss his firm's newest ETF, the Disaster Recovery Strategy ETF, ticker FEMA, like the Federal Emergency Management Agency. Get it? Now, this ETF, like others, is centered around the theme that its sponsors have identified as investable. In this case, the theme is opportunities among companies engaged in recovering from natural disasters like hurricanes, fires, floods, earthquakes, volcanoes, you name it. And as you will hear in this conversation, these companies constitute a very wide-ranging group hailing from a diverse group of companies: home goods, water treatment, water transportation, waste management, dredging, construction, engineering, even insurance and electronics, weather satellites. So inherently, you are getting diversification baked in with this basket of stocks. In today's interview, Andrew also discusses how investors might incorporate this ETF into their portfolios, perhaps as a satellite position or as a way to benefit from a short-term catalyst, like a natural disaster, that drives these stocks higher. I guarantee not only will you learn a lot about this theme today, but also, if you read between the lines, how to think about specific theme ETFs and, more generally, how to use these theme ETFs, whatever they are, in your portfolio. Here's my interview with Andrew Chanin of Procure ETFs. All right, Andrew, welcome back to the show. You've got a new ETF that you just launched a few weeks ago, and the theme is the Procure Disaster Recovery Strategy ETF, ticker FEMA, like the agency, FEMA, very easy to remember. Now, you're tracking a portfolio of companies that are in the business of helping recover from natural disasters like earthquakes, fires, hurricanes. How did this idea come about? How did you identify this opportunity?
Yeah, so one thing was that this wasn't necessarily an industry that an ETF had been created around yet. And part of it is looking for opportunities where we can create something new and innovative to provide new exposures for investors. Another one is also looking at kind of the long-term capability of a theme. And when we look at something like natural disasters, these are something that have likely affected every single person on the planet. And so a thing like a hurricane, a wildfire, droughts, earthquakes, volcanoes, flooding, these are things that, no matter where you live, you or someone that you know is likely either a survivor, a victim, or is potentially going to be affected by these in the future. And what really started to catch our attention as we started diving down into this theme more was looking at the increase over years of the intensity and predominantly the financial devastation that comes along with natural disasters. And some of the costliest natural disasters have happened just in the last several years alone. And this is something that is global in nature, whether you're living on the coast in the East Coast in the US, or you're living in the Ring of Fire out in the Pacific, or you're living, in the middle of the country. There are all types of natural disasters that can affect you. And what's really scary is that, fortunately, the fatality rate from natural disasters has been going down, which we attribute to better warning, better preparation, better engineering. But you do have more people living in potentially high danger risk areas. And that's because people are buying second homes and third homes, and we're seeing population centers increase. And so although the fatality level as a whole has come down slightly from natural disasters, the cost of the devastation has been increasing significantly. And we're looking at roughly over $400 million a day around the world from these disasters. But the U.S., the White House just came out over a month ago saying that they believe that by the end of this century, the cost of natural disasters to the U.S. budget alone may be roughly $2 trillion per year. And that's almost $5.5 billion a day. That does not include what individuals or companies are going to need to spend to prepare for natural disasters or to recover from them. It doesn't include what other countries will be spending. And so we see this as these companies being in even greater demand than many people might realize. And because of this increasing financial devastation, increasing need for these companies helping with prevention, recovery, mitigation, and so on, that this could be a really interesting industry segment or theme that many people might be looking for exposure to.
Right, absolutely. And I am reminded of quite a few conversations I've had here on the show recently regarding commodities and the opportunities there with regard to the Russia-Ukraine war. And I'm picking up sort of a similar vibe here, Andrew, of nobody is saying let's profit off tragedy and suffering, but it's more like what is the opportunity here in terms of, in your case, companies that are coming in there to help and make the situation better. So it really does strike me as kind of a win-win for everybody. Do you feel that way?
No, absolutely. I've fortunately managed to live through Hurricane Katrina when I was down at school in New Orleans. Being a New Yorker, I saw Hurricane Sandy, and we housed about 14 people in our New York City apartment for several days while even we were without power. I've seen the effects and devastation firsthand, and I understand the importance of having plans and preparation. And sometimes that could also be equated to financial plans and trying to prepare for different types of scenarios. So being able to provide new access and exposure to investors was what we were hoping to do. This could be used for people for many different purposes, whether you're an individual that wants to invest in this longer term theme of what we're seeing with climate change occurring, whether you're an insurance company that's potentially looking to position themselves for increased devastation from natural disasters, whether you're a hedge fund looking for things as a short-term catalyst trade. There are many reasons that someone may look at a fund such as FEMA. And to us, it was important to categorize these types of companies and provide that new exposure for investors.
Well, that leads into something I did want to talk to you about, which is let's talk about the index for a minute, how that was developed, and what are the criteria for including companies?
Yeah, so this was something that took many years of development, many partners before it was finalized into this Vetify Index, which is actually the first ETF here in the US to license under the Vetify brand a new index from them. So we were thrilled to do that. But this took many years of development before we felt comfortable with the composition and the strategy methodology behind an index. So first, it was really important to identify what are these natural disasters, whether natural, whether man-made, man-accelerated, meteorological. There are so many kind of classifications. What are these types of storms? We're looking at earthquakes, hurricanes, floods, volcanoes, droughts, wildfires. You're out in the West. That's something that you're probably living through right now.
We just had big fires in New Mexico. Fortunately, some rain is helping take care of that. But yes, I've been living through the surroundings of that as well. Yeah.
Exactly. And so, you see it firsthand. There are things that, companies do in order to help ahead of time to try to help to mitigate or make certain areas more resilient. In California, you have hospitals that are being required to build up their capabilities to withstand earthquakes so that they can stay online. It's a multi-billion-dollar project across the hospital system in California. I mean, small municipalities, large municipalities, at the government level, there are major things that are happening. So the index provider looked for companies that were also getting contracts from FEMA and related government agencies from around the world over the last 5 years. One of the first things that I always looked to when you're told that a hurricane is coming is you go to a Home Depot, you go to a Lowe's, and you buy plywood to put up over your windows to protect the glass. After the storm, you're then going and maybe you're buying paint or you're buying equipment to redo your roof or other things that may have been destroyed. So it was really looking at, the types of disasters, the types of companies that help in preparation, mitigation, resilience, and recovery. And what you end up with are some home goods and home improvement places. You end up with water-related companies, so water treatment, water transportation, waste management, waste mitigation, dredging, construction, engineering, consulting. There's a large list of types of companies that come into play, and we actually have an overlap in one of the names with our space ETF UFO, and that's Maxar. And Maxar has satellites positioned around the world and in orbit that are helping us track weather patterns, track wildfires, detect storms and their movements. And so, natural disaster, takes many different players to help us be best protected and best recovered. And this is something that's providing a truly diverse global focus on these types of companies that come to our aid when we need them.
Were you actually seeking to have this kind of built-in diversification within the ETF itself? Or is it just that this particular theme, that's just the way it works?
Both. I think it's important. If you're creating an ETF, if it has a completely similar composition to another theme or industry already, that might not provide much opportunity or reason for an investor to consider it. When you're providing exposure to new companies where they can access companies and geographical locations that maybe are difficult to, this is something that I think investors look for, and seeing that the fund has very little overlap with any other funds out there. It's not just another global infrastructure play. There's many different companies that you would never find in those types of funds. And so those that are looking for unique exposure or differentiated exposure, this could be an interesting satellite position that they might like to add to their portfolio. And instead of Texas hedging themselves and putting them into another fund that's giving them the same exposure.
Well, you just mentioned the idea of the satellite position here, because I was going to ask you how you're suggesting that investors incorporate the FEMA ETF, because as you know, and as many of the listeners know, in a traditional asset allocation, you've got maybe your SPY, you've got some international, maybe some emerging market, maybe some other main asset classes. How do you suggest that investors use this ETF?
Yeah, for every investor, they're going to have their own uses and needs for portfolio construction. I think that this is providing for probably most people out there new exposures or a new way of classifying and accumulating these types of companies. Whether you live in a high disaster area and you're seeing these companies come to your aid on a regular basis, and you realize that as a potential investment opportunity. Many people didn't know the company Generac until the Texas grid went down over a year ago. And now it's something that, many houses in all different areas, whether you're a business or an individual, are looking for types of services like that. And so I think, one of the great things about the ETF industry is that you get to create products that sometimes people don't even know that they want. And once they understand the investment thesis, they say, this makes a lot of sense. And they may use that for numerous reasons. They may try to use it as a hedge. They may try to use it as, exposure to potentially a growing industry, like the stats that we mentioned earlier. I mean, these are tremendous numbers. I mean, $5.5 billion a day that's coming out of the U.S. budget to go to this. If someone really believes in climate change and thinks that these devastations are going to get worse, whether you're living in Miami and concerned about rising sea levels, you're living out west and you're concerned about droughts, and you're a farmer and you're trying to figure out, how we're going to need companies to aid us. We're not just going to give up on farming. These are really important companies in our times of need. And so, some people might look at, oil because they think oil is going to spike, briefly after a hurricane comes through the Gulf and maybe takes, refineries and ports offline. This is a much kind of broader focus and strategy that looks at the many different layers and, the full kind of timeline of a natural disaster, and is providing many of these different types of companies that are aiding throughout that timeline.
Not sure what stocks to buy and which to sell? Well, no worries. MarketBeat has you covered. Get the latest buy and sell ratings from Wall Street's top performing, most accurate, and most respected research analysts. That's just one part of what you will receive as a MarketBeat All Access subscriber. You'll also get MarketBeat's new trending stock lists, which monitor social media chatter in real time to help you identify the next GameStop or AMC before you hear about it on the news. MarketBeat All Access also features real-time news, market events, and performance data for your stocks with the MarketBeat portfolio monitoring tool. And you can take a completely risk-free trial for just $1 if you head over to the link we will put in the show notes. You'll get best-in-class stock research tools, performance ratings for Wall Street analysts, real-time news feed, executive support team access, all of this ad-free for just $1 for the first month. Sign up today. The link is in the show notes. Now, I'm looking at the fact sheet right now for the fund, and I'm looking at the top 20 holdings here. And one thing that really strikes me, and you alluded to this a few minutes ago, Andrew, is the fact that you're looking at an international thesis here. And a lot of these stocks I'm seeing are actually traded on foreign exchanges. So there's a bit more of diversification right there inherently baked in. Let's talk a little bit about some of the holdings that stand out for you right now.
Yeah, so we mentioned Generac, and I think that's, a great example that people understand. One company that most people might not understand is a Great Lakes Dredge and Dock. Dredging is really important. Rebuilding coastlines is really important. After Hurricane Sandy came in, Great Lakes Dredge and Dock was hired to come and rebuild the coastline. And that was many miles of New Jersey coastline that needed to be rebuilt and have sand and dune levels raised. When you had the Horizon Gulf oil spill, they also came in and they helped build up the sand heights so that less oil would make it onto the actual Gulf Coast. You have a company like Clean Harbors that specializes in waste removal. So whether that's toxic and chemical waste or other types of hazardous waste, many people don't realize, but that's one of the most critical roles following a natural disaster. When you have flooding, when you have hurricanes, you bring so much debris, chemicals, and other things that just get washed along with that. And recovering from that is absolutely critical to prevent other medical types of emergencies. We mentioned Home Depot and Lowe's, but similar companies like a Westfarmer out in Australia is providing similar services for people out there. Torii Holdings is providing home furnishings and things like that out in Japan when you need them. So there's absolutely a wide range. You have a company like Gorman-Rupp that makes pumps and things like that you need that help with wildfires and transfer of water when you need them. You also have companies that are even helping to build specialized automobiles. So think fire engines and things like that you need highly specialized equipment when you're coming in to help an area recover from a natural disaster. So what you'll see is a really wide range of diversified companies. And you even have water companies, and because you mentioned how it's a global fund, you have a company like Skanska, which is a European company based out of Sweden. And they help do all different types of infrastructure, construction, consulting, water management, treatment, even helping to build up areas along riverbeds to help prevent flooding in the future. So, it's not just about rebuilding. Sometimes it's, building in mechanisms to help you prevent those disasters from being as bad as they may be in the future.
Now, one of the things I'm looking at on the fact sheet, I just want to talk a little bit about this so the listeners understand how an ETF like this is constructed. You're equal weighted. Explain what that means as opposed to something maybe like the S&P that they may be more familiar with that's market cap weighted.
So once a year, the index committee will review the companies in the fund. They'll also go and look at companies that hadn't necessarily previously qualified. And they'll look at the ones that meet the requirements to put into the fund. So the first run through, they arrived at these currently 62 companies. And every quarter when the fund rebalances, it will bring the weightings for each of those companies back in line. So if you have 62 companies, you divide the total assets of the fund by 62, and that should be the percentage weighting across each of those companies every quarter. So while the names may not necessarily change more than once a year, there are circumstances where the holdings could change in between, but basically every quarter, those names are being rebalanced right back to an equal weight amongst all of them in the portfolio.
And what's the reason to do it that way rather than market cap, at least in your case?
So it's difficult. Some companies may be more pure play than others. Some may have, better quarters than other, but they're all providing, these various important use cases during natural disasters or leading up to them. And so to us, it's constantly evolving. The companies that are providing these services, the types of storms that may be more devastating one year versus the next, by trying to do something that, just looked at, past storms or things like that, that might not always hold true. You could have a really bad year for earthquakes. And if you've been loading up everything, looking at past storms, saying that, hurricanes were going to be the big one this year, all of a sudden you find yourself, very underexposed. So this was a way to give each of these companies, room to increase or decrease, but bring them back to an equal weight at these rebalance periods.
That makes perfect sense as you're saying that, because sure, one year's natural disasters may be different from the next. And also, let's just be honest about this. These companies, many of them at least, are in other businesses as well. So you might be affected by the business cycles in their other areas that they're involved with. Is that true?
Absolutely. And that's precisely, the reasons why, this type of strategy to us made sense. It's also very difficult to dig in through each of these companies and pull out specific revenues from natural disasters as well. It's not something that they make readily available, and it's only available in extremely few cases across the entire securities industry. So by doing this equal weighting approach, it gave each one an equal opportunity to have an impact on the fund performance.
Andrew, if the listeners are interested in learning more about this ETF, perhaps investing or just getting some more information, how would they find out more about Procure funds and the FEMA ETF specifically?
Certainly, they can talk to their financial advisors, but we have a wealth of information on our website, ProcureETFs.com. That's ProcureETFs.com. We have information about UFO, our space fund, as well as FEMA, our natural disaster recovery fund. And we'd be happy to speak with anyone that's interested in learning more as well. So if you add your name to the mailing list, we put out regular pieces, whether microblogs or industry updates, news updates and things like that. So people that want to be alerted to things as they change, they can add themselves to that as well. And hopefully they can tune back into your podcast and we can join you again to talk about updates in the future.
Yeah, would love that. Absolutely. And I will link up in the show notes our previous conversation where we did talk about UFO.
Wonderful. Thank you so much, Kate. It was a pleasure as always.
All right. Thank you, Andrew.
Have a great day.
Thanks again for listening to the MarketBeat podcast. Do not forget to subscribe on Apple Podcasts, Spotify, Stitcher, Google, anywhere else you get your podcasts. And you will also find us on MarketBeat.com. If you enjoy the content here, please give us a 5-star review so others can also find all the great interviews and market insights that we bring to you each week. Also, did you know that MarketBeat has a YouTube channel? We sure do. The podcasts are there, as well as tips for getting the most out of MarketBeat and becoming, as always, a better investor or trader.